Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading stocks, bonds, and crypto assets around the world. Ever since October 10th, I have become extra bullish about my AMD stock. I have been buying more shares at the dip of 130s, which is why I believe it's a now or never situation happening with AMD stock. I will show you a technical chart of AMD that will make you want to load up the boat as well. I think Wall Street wants you to sell your AMD shares before this earnings because it will be a game changer. Why is that? Well, let me explain. Advanced Micro Devices AI event on October 10th indicated that the company is going all in on the data center AI GPU opportunity. AMD announced a new AI accelerator set to launch in Q1 next year. That is meant to directly challenge NVIDIA's Blackwell GPU chip. NVIDIA faces a massive catalyst moment in the fourth quarter, which is when the chipmaker is set to release its much anticipated Blackwell GPU. Its latest data center chip. Ironically, Blackwell's GPU being sold out already could boost sales for AMD's own AI accelerator. While any shortages are set to benefit AMD and NVIDIA's GPU pricing. In my opinion, AMD is set to see a significant gross margin uplift in the upcoming quarters, and the company is also on the brink of growing its market shares in the AI GPU market. The AI boom is just getting started for AMD. I bet AMD was set to see a major acceleration of its revenues in the data center segment. AMD recently launched its AI chips MI300X, which are seeing rapid customer uptake. This has begun to fuel the company's data center growth in Q2. With a new Gen AI accelerator coming to market in Q1 2025, I believe AMD is set to see a massive gross margin expansion as well, and the company has a much improved earnings picture. The fact that Blackwell GPUs are sold out for the next year suggests that AMD could hit the ground running in Q1 and make massive inroads in the data center GPU market.
AMD is set to benefit from Blackwell GPU shortage. On its AI Day, October 10th, AMD announced its newest AI accelerator, the Instinct MI325X, which is set to go toe-to-toe with NVIDIA's Blackwell GPU. If you don't already know, NVIDIA said its Blackwell GPU supply is already sold out for the next 12 months. Which should benefit sales of AMD's MI325X data center chip. Further, AMD announced Instinct MI350 series accelerators based on AMD's CDNA 4 architecture, which are going to hit the shelves in the second half of 2025. This series of AI accelerators is expected, according to AMD, to deliver a 35x improvement in the inferencing performance compared to AMD's CDNA 3, therefore making the chip attractive to buy for hyperscalers. The MI325X chip delivered up to 40% more inference performance compared to NVIDIA's H200 AI GPU chip, which is used for Meta's Llama 3 large language model. In the second quarter, AMD's data center revenues surged 115% year over year. AMD came closer to matching NVIDIA's top-line performance in its data center segment. NVIDIA's data center revenue grew 154% year over year in the August quarter.
The launch of the new high-priced AI GPUs is set to benefit AMD more than NVIDIA. In my opinion, this is because AMD is still less dependent on the data center business as a whole, allowing for more upside through a growing percentage of data center revenue. In the last quarter, NVIDIA generated 122% year-over-year consolidated top-line growth compared to AMD's 9% year-over-year growth, and NVIDIA achieved 88% of its Q2 revenue in data centers compared to just 49% of the revenue for AMD in Q2. Obviously, the launch of the MI325 chip is more than just a catalyst event for AMD's top line. AMD has a unique opportunity here to see a significant gross margin uplift in the coming quarters as the higher margin GPUs come to market and can be expected to be met with high demand. Large tech companies so far don't seem to be slowing their spending on AI infrastructure. The fact that Blackwell supply is already severely limited for the next year indicates that AMD's next-gen AI chip could have a strong start. AMD's gross margins are significantly lower than NVIDIA's currently, but as more revenues shift to high-priced data center GPUs, AMD is not only going to see a revenue surge, but also a positive change in its gross margin profile. With AI chips for data centers costing $30,000 or more, and I believe that AMD could grow its gross margins to the mid 50% range fairly quickly, up from 49% in the last quarter.
In the long term, I would expect AMD's gross margins to climb to the mid 60 range. The MI325X chip, in my opinion, could realize market price around $30K to $35K per unit, and potentially more, depend on how severe the Blackwell shortage will be. While AMD has stronger potential for gross margin growth, given its data center segment only accounts for 49% of the total revenue, NVIDIA remains obviously the top dog in the AI data center market. As a result, AMD also has a unique opportunity to grow its market share in an industry that is still very much dominated by NVIDIA. It has a market share of 94% in the data center GPU market, with AMD trailing far behind at only 4%. Intel is lagging even further, but the company recently launched its own Gaudi 3 AI accelerator to compete with NVIDIA and AMD. Speaking of Intel, recently Intel and AMD teamed up to confront rising challenge from ARM. Their CPU market share has been eroded by ARM, which licenses a competing architecture for computing to laptop chips design such as Apple, Qualcomm, and Amazon. Amazon uses in their data centers, obviously, the cloud. By contrast, Intel and AMD uses underlying x86 technology in their chip. Intel CEO Gelsinger said, "Rumors of my death are severely exaggerated. We're alive and well. We see that the x86 architecture, the foundation of computing for a decade, is about to go through a period of customization, expansion, scalability, with the opportunity that AI will present, and our ecosystem is robust and growing." The MI325X and MI350 series are the two best chances that AMD has had in years to take some market shares away from NVIDIA.
AMD is trading at about the same valuation level as NVIDIA in terms of next year's forward PE. However, both companies have serious catalyst events ahead. NVIDIA's Blackwell is set to launch in the fourth quarter, while AMD's Instinct MI325X is set to be available in Q1 next year. Both companies have therefore significant revenue, free cash flow, and margin upside, which should be reflected in incremental gains in valuation. While I like to swing trade with NVIDIA stock, my AMD position is long-term, and it's been steadily climbing in the last several months. This is in part because I feel that the revenue growth curve in the data center segment is only starting for AMD, and the company has significant free cash flow upside. With AMD now also being able to launch a direct Blackwell rival fairly shortly after NVIDIA's own chip launch, which uniquely sets up AMD to benefit from a Blackwell GPU shortage. Further, AMD has a much lower market capitalization than NVIDIA, indicating, at least theoretically, better odds of doubling or tripling its market cap in the upcoming years. AMD currently has about 1/12 the market valuation of NVIDIA.
Shares of AMD are currently trading at a 4 PE of 31. In my last videos on AMD, I calculated a fair value of about $200 per share, based on a fair value PE ratio of 36 times. After the AI event on October 10th, I believe AMD is set for an even bigger breakout next year, which is directly tied to the company's improving AI GPU product lineup. I believe AMD could see a 50% revenue growth next year due to the launch of both the MI325X and MI350 series AI accelerators. This is because they are set to come to a market at a time of what appears to be a severe data center GPU shortage. This should fundamentally boost AMD's pricing power and support AMD's revenue acceleration. Therefore, I believe the market widely underestimated the company's revenue and earning potential for the next year.
The market did not react overly enthusiastic to AMD's new AI chip release and its AI event in general. But I think that move is purely technical, as I will show you on the stock chart. AMD is now being manipulated by Wall Street the same way as they did for my Tesla stock. If they wanted to buy in the 150s, they were definitely driving the price down so that they could get what they wanted. As AMD is stuck in this 7-month wedge pattern, most of the retail traders have completely sold out by now. There is no hype whatsoever in this stock at the moment, which I think is where the opportunity lies. I think we are going to break out above 175 soon after the earnings, and on our way to make new highs in the rest of 2024, because on the monthly chart you can see there is a new cup and handle pattern forming, which will play out to be an upside of 70% from here. Lisa Su said we are just getting started here. As NVIDIA's revenue growth rate comes down, we will see AMD's revenue growth rate going higher and higher. I think AMD stock will outperform NVIDIA next year for sure. I believe AMD will be the top AI play in 2025. And here is my client Caitlin Morson's new book, Impending Doom. Okay, I'm going to read a little bit, just a sneak peek for you. He unlocked the door, opened the door, and eventually we escaped my parents' house, and we were on the road. We headed to a city with a large population. So congratulations, Caitlin Morson.